Today we have some intriguing news to discuss regarding AMC and GameStop. Recently, Roaring Kitty, a prominent figure in the investment world, has hinted at the potential squeeze dates for these stocks through a series of cryptic emojis. These emojis, when cross-referenced with his previous tweets, seem to suggest a specific timeline. Additionally, we'll explore how the SEC might be shielding illegal short-selling hedge funds for the sake of market stability. Let's dive in. Hey, welcome to AMC Daily. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But everyone, remember, this is not a financial advice video. The story begins in May, when Roaring Kitty tweeted a video accompanied by a string of emojis. Due to copyright concerns, we won't play the music from the video, but the emojis themselves are key. Each emoji corresponds to a previous tweet by Roaring Kitty, creating a timeline of events. The most recent emoji in the sequence was a dog, tweeted just a few days ago. Following this, the next set of emojis appears to align with American Independence Day, suggesting that significant events might occur around the 4th of July. After that, the sequence indicates something fiery, potentially signaling trouble for short sellers, followed by an explosion and then celebrations. This timeline implies that we might be 3 to 5 weeks away from a major squeeze in AMC and GameStop, depending on when these pivotal events unfold. According to Frank's Place, if we are currently at the dog emoji and the 4th of July is next week, each emoji likely represents a 7-day interval. This means the celebration emoji could be just 5 weeks away, marking the climax of the squeeze. While this interpretation is speculative, it aligns with previous patterns observed in Roaring Kitty's tweets. As we approach the 4th of July and the subsequent weeks, it will be fascinating to see what Roaring Kitty tweets next. His actions could trigger another surge in GameStop and AMC stocks, potentially overwhelming short sellers who may not be able to suppress the stock prices any longer. Recent market data suggests that shorts are already losing control, evidenced by a massive buy-side order imbalance for AMC. On the New York Stock Exchange, AMC recently experienced the largest ever buy-side order imbalance, with nearly 9.8 million more buy orders than sell orders in a single day. This unprecedented demand indicates a strong bullish sentiment among investors, further pressuring short sellers who are struggling to find shares to borrow. This significant buy-side imbalance is a dire sign for short sellers. Practical Stocks recently tweeted an article warning about the risks of trading GameStop, likening it to gambling. Experienced traders are becoming increasingly concerned about the impact of retail investors' actions on the market, indicating the high stakes involved. Frank's Place also uncovered some intriguing details about Andrew Left of Citron Research. Despite publicly stating that he closed his short position on GameStop, Left was implicated in a Department of Justice probe for receiving payments to bash certain stocks. This revelation sheds light on the shady practices employed by some short sellers to manipulate stock prices. And SEC investigation revealed that Anson Funds Management and Anson Advisors were fined $2.25 million for concealing payments to a researcher who posted negative reports about specific companies. This scheme generated significant profits for the hedge fund, highlighting the unethical tactics used to drive down stock prices. Given these revelations, it's clear that some hedge funds are employing dubious methods to maintain their short positions. This raises questions about the SEC's role in regulating these activities. Despite the apparent ease of implementing measures to curb illegal short selling, such as requiring disclosures for short positions exceeding 5% of a company's float, the SEC has been reluctant to act. Fly Eagles Fly suggested that the SEC could drastically reduce illegal short selling by mandating that shorts disclose positions over 5% of a company's float. This simple measure would increase transparency and potentially deter illegal activities. However, the reluctance of financial regulators to implement such changes suggests that they might be protecting the interests of these short sellers. As we continue to monitor the situation, it's essential to recognize the broader implications of these events. The actions of short sellers and the response of regulatory bodies have significant consequences for retail investors. Despite potential market manipulation, the enthusiasm and determination of investors like those following Roaring Kitty provide hope for a fairer market. In conclusion, While the exact timing of the AMC and GameStop squeeze remains uncertain, the clues provided by Roaring Kitty offer a compelling narrative. The coming weeks will be crucial, and the actions of both investors and regulatory bodies will play a significant role in shaping the outcome. Guys, that's all we have for you today. What is your opinion about AMC stock? Get involved and let us know in the comments down below. Thank you for watching.